Should you fix or should you keep your loan variable? That is the question that we're addressing today. It's Marissa and Kristen from Rise High. Kristen, fixed versus variable. How many times do you get this question each week?
Well, I think it's at least daily, if not multiple times a day when speaking to customers.
And I think at a time when rates are changing and there's talk of rate movements, it's particularly important to make the right decision about whether you're going to fix your loan into a fixed rate or whether you're going to keep your loan variable. So today we're going to address the pros and cons and some things that you should think about in making that decision. So let's start with variable loans. What are some of the pros and cons of variable loans?
Right, so as it suggests, a variable rate loan is something that goes up and down, ultimately with Reserve Bank movements, but also banks can move the rates outside of what the Reserve Bank is doing depending on their cash flow pressures and things like that. So a variable rate loan, it moves up and down throughout the 30-year period or however long you've got your home loan for.
And so how often will the rate change on a variable rate loan?
Yeah, so how long is a piece of string? Ultimately, it could change monthly even. We've tended to see over the last few years, they've been relatively stable, tend to be on a bit of a downward slide, but who knows what the future will bring.
And what are some of the downsides of having the rate, the variable rate loan?
So I guess a variable rate loan, the biggest risk is that rates go up and your repayments increase. So ultimately you stand to pay a lot more in interest and a lot more in your repayments if rates do go up.
I guess there's an extra element of risk because the rates can, but like you said, there's a lot of positives as well.
Yes, absolutely. So with a variable rate loan, generally they're a more flexible product. So what that means is you can pay extra into your loan. You can pull that money out if you need that extra funds that you've put into the loan. You can have an offset account attached to your facility, which we've got another YouTube video on explaiing what an offset account does.
We're big fans of offset accounts,
absolutely.
Aren't we?
Yeah, so a lot more flexibility. One of the other things is that if your rate is variable, it makes it a lot easier to refinance across to another lender and take advantage of better rates that may be out there in the marketplace. And the other thing with that as well is that if you refinance or if you do sell your property, there are no break fees associated with a variable rate loan. So lots of positives with a variable rate, but the big risk is rates go up, you pay more.
But I guess on the flip side, if rates go down, happy days.
Absolutely, take advantage of it.
So let's talk about fixed rates and how they differ from variable rates. So what is a fixed rate loan and how is it different from a variable rate loan?
Yeah, so a fixed rate loan is exactly that. You fix the rate on your loan for a specified period of time. So generally that tends to be between 1 and 5 years. And it's all about chatting to your mortgage broker and I guess understanding what terms best going to suit you at that point in time.
And so what are the pros, what are the positives of having a fixed rate loan?
Right, so the positives are that if rates go up, you are locked in at that rate for that period of time. So it makes managing your cash flow, managing your budget week in, week out a lot easier. You can set your repayments and basically forget about them for the next couple of years.
Yeah, I guess on the flip side of that, if rates go down, you won't be able to take advantage of that cheaper interest rate because you're locked in at that fixed rate.
Correct. So that's definitely one of the negatives of a fixed rate loan.
What are some of the other things to look out for, some of the other negatives that we need to be aware of?
Yeah, so just with a variable rate loan being really flexible, generally a fixed rate loan tends to be a lot less flexible. So you're limited in how much you can pay off during that fixed rate period. You may not be able to redraw those funds and you may not be able to get access to having an offset account. So it's a little bit less flexible.
Yeah, there's not too many banks that do allow redraw and offset with a fixed rate. There are some that still do, but it's very limited for choice, isn't it?
Yeah.
We also you mentioned break costs before when we're talking about variable loans. So just explain what that is and how that applies to fixed rate loans.
Yeah, so if you have a fixed rate loan and you want to refinance or sell your property or basically break the terms of that fixed rate, you may be up for in some cases, quite high fees.
Yes.
Unfortunately, the break cost is not something we can quote you at the very beginning and say, look, if you pay out your loan, you'll be, $2,000 out of pocket. That fixed rate calculation is dependent upon a few variables. So what the rates are at that point in time, how long you've got left to run on that fixed rate loan, but it's definitely something to be aware of, and one of the disadvantages, I guess, of having a fixed rate loan.
So I think if you go into a fixed rate loan, you've got to be really sure that you're going to be holding the property during that period, and you're not going to want to refinance it or sell it, because obviously that could trigger really expensive break costs. Are there any other circumstances that you think it's best to avoid fixed rate loans?
I guess potentially depending a little bit on what the market is doing.
Yeah. And I would also probably throw in there that if you're really good at saving and you know that you can build up a good amount of savings in your offset account, that's a good opportunity to maybe take advantage of a variable loan rather than a fixed loan.
Yeah.
But like Kristen said, it's really important to talk to your mortgage broker about your individual situation to see whether fixed or variable will be best for you. But can you get the best of both? Like, is there a way that you can take advantage of the pros of variable and take advantage of the pros of fixed and try and get a little bit of both?
Absolutely. So what we end up doing on discussing the option with a lot of our clients is splitting your loan. So you've got a standard home loan of say $400,000. You can split that to a fixed portion, have the benefit of locking in the rate, but you could also have a portion of that loan variable, meaning that you can have an offset, redraw, all the bells and whistles attached to a variable rate loan. So kind of take the best of both worlds.
Yeah.
Now what that split is, it's completely up to you. Your mortgage broker can chat you through, different scenarios depending on how much you think you can save and your cash flow budget and that type of thing. But a split loan definitely gives you the best of both worlds.
And I think with a split loan, probably one of the biggest questions that you get is how much should they leave variable and how much should they have on fixed? What sort of advice or what conversation do you have with your clients around working out what is the right percentage to fix versus stay variable?
Yeah, look, it's different for absolutely everybody. So it can come down to ultimately your budget, how much you think you'll be able to save during that fixed rate period. We even consider things like, do you think you'll get a pay rise during that period and be able to put extra into your loan? So it is a bit of a judgment call,
yes.
And it is absolutely different for everybody. But
I think what I loved about what you just said is the fact that when you're looking at fixing even a portion of your loan, you really have to take that long-term view. So you have to kind of think about, if you're taking a 3-year fixed rate, what's going to happen over the next 3 years to make the right decision for yourself now. So that's something that definitely your mortgage broker can help you with. I hope you've learned a lot about variable and fixed rates today. We would love to help you at Rise High, and we look forward to helping you achieve your goals and dreams. Thanks for joining us today. We'll see you next time. Bye.
Bye.